Welcome to Al Stock Trades. In this video, I'm going to be talking to you about the AMC stock. I have 10 years worth of investing experience, and I'm going to be sharing with you guys an educational platform on why I think the AMC stock is trash. Now, first, let me just go ahead and preface this. There have been a lot of YouTubers out there that have been making and pumping out AMC videos just to get views and get revenue money. And it's very disgusting. They're not showing you the whole picture. And if you look at their YouTube history, they got into this whole stock market frenzy. Unfortunately, since the pandemic has crashed, usually 1 to 2 years. You guys can look at my website, alstocktrades.com. You can look at my credentials and you can see exactly who I am. I have 4 degrees. My 5th degree is going to be an MD degree. And, I'm just here to show you guys and help you guys not to make a mistake. There's a lot of apes out there that essentially want to rile you up to all the new apes to buy in. So then they tell you, oh yeah, the stock is going to go to 200, 300, 400. And then if it goes up to that high, they're going to basically sell at 40, 50, 60 bucks, 70 bucks. And they're going to basically essentially let you hold the bag. Okay. So don't get confused. Don't get lost within this BS. You got to look at the data, and I'm going to show you guys within this presentation why I think the AMC stock is trash. Okay. I will be giving you a price target on the intrinsic value calculation. And I encourage other finance YouTubers out there that are educational to go ahead and speak up and essentially help people not make these mistakes. Okay. So first things first, I'm going to go into that in terms of the short squeeze that happened in June. But first things first, AMC's income analysis states that they have $2.5 billion worth of revenue. Now, I know that these numbers look weird, but they are in millions, okay? So this is $2.5 billion. Their cost of revenue is a negative $2.6 billion. They're negative on the gross profit. They're negative on other expenses, and on the earnings are also negative as well. Okay. Going further, if you look at the key fundamentals, their market cap technically right now is trading 2.90 times price to sales, okay? Which means that, people are essentially evaluating them higher, expecting them to grow more, and which is understandable considering they used to make approximately $5 billion back in 2019, which I will show you. But here's the thing that people unfortunately do not look at. So Trey Trades, which is a prominent YouTuber with 300,000 views, I like his passion. He talked about how he believes that AMC is able to afford to pay off its debts. Now, it's true. They can, but guess how much money they're going to have? They're going to be left with only $80 million. Do you think a company with $80 million should be trading at $7 billion in terms of market cap? The answer is no, okay? And the reason why is because look at the debts that they have in terms of their long-term assets in comparison to their long-term liabilities. Now, let's take a step back. If you guys don't know what these terminologies are, you need to understand them before you invest in the stock market. Short-term assets essentially are usually geared to pay off short-term liabilities. These are within an 18-month span, usually 12 months, which means that they need to pay this debt off now, okay? The problem is they don't have enough cash. So what does a company have to do? They have to issue shares. They have to dilute the investor. And they've been doing these dilutions heavily because essentially at the expense of the retail. I'm going to give you guys a price target, my intrinsic value calculation, which goes 10 years into the future, discounts back at a 10 to 15% discount rate using a 2 to 3% perpetuity model to find you the intrinsic value of the stock. If you guys haven't heard any of these terms, of course you haven't. These guys that you've been watching are complete crooks, okay? And I'm going to want to help you guys. So look at the shares here. Look at the shares. You got 98 shares back in 26. Again, this goes from 2012 to 2021 all the way up to TTM, which is 2022. If you look at the shares here, boom, 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 you got 128, 130, 104. They started buying back shares, and then 117, and then boom, they just 4x the amount of shares. 4 times diluted you. So if you have basically a one slice of a pizza, they essentially diluted it. They took essentially 3/4 out of that pizza. Now you own even a skinnier slice. Guys, this is pure criminal. All right. And, Trade Trades is like, he doesn't like the whole dilution idea. And maybe they can do an NFT, offer with $50. And, there's a war chest that people, the retail investors have offered them. Listen, guys, they need to dilute the stock. Whether we like it or not, they're going to be diluting them. And the more they dilute them, the intrinsic value of let's say the stock per share price decreases and it won't get up. That's one thing I agree with Trade Trades. And I'm going to show you guys the equation right now. But first, let's go into the more specifics here. So back in June, we saw a price to sales ratio of literally over 8 times. Now it's finally compressing down and it could go down even more. If you look at the calls to puts ratio, there are more puts than there are calls right now. Okay. And this is directly for AMC. Now, again, if you want access to this information, we have a Patreon link down below, which will basically port you to our Discord channel where there's going to be bots that I've designed and I've collaborated with prominent software engineers where you can search any ticker you want. You literally place the ticker and the code and it literally gives you this specific graph and all the graphs that I'm going to show you. Now, if you look at the biggest flow right now, we have a strike price at $15 with a push, with essentially put options placed bilateral from both sides. And as you can see here, the price has been sticking around this particular price region. If you look at the dark pool levels, interestingly, it's been basically hovering around the largest, around $18 all the way down to $15.69. Again, this is true. This is a manipulated stock. However, we have to understand, and I'm going to show you guys proof, shorts are starting to slowly cover. If you look at our artificial intelligent technology prediction model, it says that intraday AMC is a terrible investment. However, through a swing trade or options or combined, it's bullish. So you have that for you. But you got to understand, you got to use artificial intelligent analysis, technical analysis, sentimental analysis, and my favorite, fundamental analysis to help you ascertain whether an investment is the right one for you. So now let's look at the algo flow for all the algo traders out there. If you go ahead and look at the 5-day, you can see that the AMC algo score is going down as well with the stock price, which basically signifies that option traders are bearish on the stock. If you go on the 1-day, you can see a heavy downwards direction. Guys, this is not looking good. Now, let's look at the revenue. On the positive side for AMC, they have been trickling back up, and this growth rate has caused them to essentially be able to increase in share price. But check this out. They're only reaching baseline. They're just going to where they used to be at. If you look at operating expenses, they're essentially increasing as well, trickling back to baseline. If you take the revenues subtracted from the operational expenses, they're essentially still losing money at negative $60 million every single quarter. You go ahead and basically pay off their short-term debts with their short-term liabilities, they're only going to be left with $80 million in cash, which basically is allowing them for only business activity for 1 quarter, meaning that they are going to have to dilute. Now, if you look at the net income, it is trickling down. A great way is possibly become net income positive, but it's looking pretty hard without a share dilution. If you look at the revenue operating income, just like I said, it's trickling back up, but again, not too impressive, just trickling back to where they used to be before the pandemic. Now look at the outstanding shares. If you look at the outstanding shares here, guys, look at this. It's been increasing like crazy, and they increased it to a point where it's getting hard for the AMC stock to short squeeze. They're essentially diluting you guys, and you guys own the stock now, 90%. If you look at the growth rate here, the stock price did appreciate, but this was again a nominal growth ascending back to its previous levels. Now let's look at support and resistance utilizing technical analysis. Obviously, past broken support now becomes essentially future resistance levels. There's a $14.30 resistance. If you look at the current share price right now really quickly here, we're looking at a $14.30 with an after hours of $14.24. Let me zoom in here so you guys can see. All right. Now let's take a look at this even deeper now. This is again our artificial intelligence technology. So if you want to search other stocks, there'll be a link down below. This is the cheapest. You will not find it anywhere else, and you'll have access to everything else I offer. Now, if you look at the hour chart, it went ahead and bypassed the $16 support resistance, indicating that it's going to go down. Going ahead here, looking at the day chart, again, it just passed the $15.21 resistance. If you had this, you would be able to track this and see. It went ahead, hit up, broke it, broke it, and then now it's breaking it again. Now, let's look at the week chart because this gives you more data. The one during the June short squeeze, it was able to go all the way up in the high 70 or in the mid 70s and then fall back down, then go and hit this resistance level, come back down with the support, missed it, hit it, missed it, and then missed it again. And now it just missed this one. And the next support region is $9.33. And then if it misses that, it'll be $5.59, which is why you're seeing these comments circulating around that it's going to possibly hit $5. I would say it would probably trickle around this. But guess what? The scenario that I propose is that they're going to dilute, the stock price is going to go down, retail is going to lose conviction, and you can see that already within Trade's comments. You can see them, all the people down there, when they're saying, they're like, well, if they dilute, we're going to short the stock. Well, if they dilute, I'm going to walk away with a $20,000 loss. Guys, listen, this is not a charity. This is a business, and they need to dilute, because if they don't, they're going to get bankrupt. There will be no business. If you look at the shares sold, guys, listen, insiders are selling. There's no insiders buying because they're not stupid, okay? They're selling. Look at the institutional investors. No one wants to buy this. In fact, a lot of people are canceling their freaking positions out of here. You even got this capital management company, which decreased their put options by 54.6%. They still have $1.9 million of shares shorted and skin in the game. If you look at all the funds disclosing short positions, these are all the ones that have been disclosed, and some of them have been essentially decreasing by negative 71%, a negative 11%, a negative 54.6%. And a lot of them are increasing, such as Barclays and all these other ones. They believe that stock is going to essentially keep going down. Now, if you guys want access to all the information that I provided for you, there's going to be a link down below with our Patreon group for $9.99. Now, let's move on to our intrinsic value calculation. This is our intrinsic value calculation, which you can find in our Mastering Stock Market course, which is also in the link down below. This will basically give you the value of the stock. Now, let's go ahead and take a look at this. I'm going to show you what I'm going to be using. So look at the revenue here, guys. That's why I told you they're just going back up to their mid value, which is around $5 billion of what they were at before the pandemic happened. So I'm going to give them the benefit of the doubt, and I'm going to be giving them a revenue of $5 billion by 2024, which is exactly what they're expected to grow at. Now check this out. Look at the free cash flow. For people that don't understand, if you do not understand free cash flow, you should not be investing in the market. You got to look at the free cash flow when it comes to businesses. If you don't understand that, you got to listen. You got to learn this, okay? Now look at the free cash flow. They're negative, and the highest they've ever been was 134. So what I'm going to do is I'm just going to be taking 5%, and I'm going to give them the benefit of the doubt and give them 8%, and actually go ahead and take 5 to 8% of the revenue, which should basically estimate the free cash flow. Let's do it now. Alexa, 5,461 times 5%.
5,461 times 5% is 273.05.
273, okay? And then we're going to go ahead and do it later. But by doing this right now, we're going to go ahead and take the share value of 477 million shares, and then we're going to compare it to where if they did not dilute, and the numbers will be consistent to what we've seen in the share price. Let's move this on over here. Let's hit this max so we can compare, and then let's go do our intrinsic value calculation. So like I told you, we're going to be placing revenue here. And the revenue, we're going to essentially take the highest. We're going to assume that they're going to grow at its highest, which is $5 billion. We're going to take a 5%. 5 over 100 is 0.05. Then we're going to take the revenue multiplied by this, and that should give you 273. So we're going to go ahead and do 273.55. We're going to go ahead and do 2019, 2020, because we're going to assume that they're growing, which they're not really. They're just going back up to where they used to be, which is 12.42. If you're confused where I got this number from, I literally got this number from right there. That's literally all I did. And we're going to give them the benefit of the doubt. We're going to say we're going to give them $5 billion. Again, these numbers are in millions. by doing this, it's going to be by 2024. It's been only 4 years, so we're going to alter our 4-year mark. And like I said, they have 477 million shares available. We did not even look at the stock price now. We're just looking at the fundamentals, guys. And by doing that here, by looking at that, our calculator graphs it beautifully. And you can see the stock price essentially is going to be going from a bull case, which is here, bull, base, and bear, from $14.33 all the way up to $24.60. And if you look at the price right now, it's hovering around our bear case. Now, assuming we'll give them the benefit of the doubt, let's give them 8%, which is more generous than what they deserve. It's 437.568, sorry. Then now we could see the share price going from $22.92 all the way up to $39.35. And it makes sense because that's what it was trading at. If you look at it way back in the past, it's literally been trading around up in the mid 35 region, down up in the 35 region, down in the 21 region. So it makes sense for their calculations. But check this out. Assuming that they did not dilute, let's assume that they did retail a good job. They actually ran their business successfully. They're in trouble because they ran their business to the ground, guys. If you look at this, they used to have 117 million shares. Let's update that and let me show you the stock price here, guys. You guys are going to be flipping. Look at that. $93 to 160. But again, I gave them the benefit of the doubt. Let's go ahead and decrease this back down to 5%. We're going to give them 273.55 because if you look at it here, guys, they've never, ever received in the past 10 years, they've never gone over $200 million in free cash flow. I'm being very generous of them. So we're going to bring them back down to 273. And if you look at the share price, it's going from a bear case of $58 all the way up to a bull case of $100. And if you look at that base right there, $74. And if you look at the stock price, it literally hovered around that. That's what people were anticipating. But then all these new share dilutions screwed retail over. Now all these holders, these apes, these Ooga Booga apes are basically telling you, hold and hold and hold. It's going to go up. Listen, man, they're going to be telling you it's going to go up to 400, 500, and they're going to be cashing out at $50, $60, $70, right? That's probably what they did in before. I'm not saying that it's going to go up that high, but just understand they're playing you. These are the numbers. You don't believe me? Go to Morningstar and look at their data. You think this is wrong? Go to AMC and look at their data. Look at their annual 10K report. If you don't know what an annual 10K report is, my God, please educate yourself before putting your hard-earned work money. Don't lose your money. Don't get manipulated by all these freaking shills on YouTube trying to basically pump this garbage. This is complete trash, okay? And these suits or what admin people that are on the business board here, they're not even buying shares of their own company. They're literally selling. Think about that. You guys are buying shares. 90% of retail is buying shares. This is what I think is going to happen, guys. Very purely simple. The stock price is going to go down because they're going to dilute. Retail is going to sell. The short positions are going to cover. They're going to make a killing because they shorted all the way up to 70 down below. And then guess what happens? They're going to end up buying back up the stock price because this is the intrinsic value of the company. The intrinsic value is very simple based off of the share dilution here that they recently have, 477 million. The stock price would probably dip down, let's say to $5 to $9. They'll buy in a lot. And then, who knows, they might artificially inflate the price, make all these retail people be like, oh my God, it's squeezing again. And then they sell them and give you guys the bag and short it down to oblivion. And this cycle repeats. Don't get screwed over. I posted on a lot of Reddit pages. I got banned and no one even looked at my video. Guys, please save yourself from this trouble. If you want to learn how to invest, I recommend, don't even buy my thing. Don't even buy what I offer. I recommend reading The Intelligent Investor by Benjamin Graham, who essentially taught Warren Buffett how to invest. He was his professor. Don't get screwed over. God bless you, and I'll see you on the next one.